Hello, good afternoon to all. I'd like, um, I would like to place the disclaimer first. Please note this video is for educational purpose only. Trading in stocks and derivatives carry considerable risk. Hence, please do your own analysis before trading with real money. Also, consult your financial advisors for better understanding of the trading business. So basically, I am intending to discuss about a basic strangle and how we can think depending on the market scenario right now. So this is for Finnifty, which is having expiry on this Tuesday. See, Finnifty curves are almost the curve looks almost, the pattern looks almost similar to Bank Nifty as the components are quite common. So there was a fall, as we all know, on last 17th. There's a big gap down and then it continued, and now we see the market is has become range bound for the last 3 days, right? It's neither is going up or down. Okay. Now the basic what you see here, if you are new to this platform, this is Zerodha's charting platform from IC Charts, and these are the studies or indicators I am using. We have pivot points, volume is not required. Then CPR, Super Trend 21-2 is also not required if what I discussed today doesn't need Super Trend. And then the 20 EMA, 200 EMA, this is exponential moving average. And RSI also not required, but this is on. Just this is my full setup, which I keep on. So that's why the screen shows all this, but it's not required. All of them. So I'll just remove them for the time being. Super Trend. RSI I'll keep. Volume also doesn't apply to index. It's only applies to futures. There is no volume in index. See, so overall, if we see what was Nifty Finance or Finnifty's movement, it was 0.57% in the day. That is from Friday's close to Saturday's close. This is the range it has moved. Finally, it has closed in green from Friday's close. So from 446, it has gone to 557. So another 100 points. Okay. Now, let me take you to Sensible. I think you already know what is Sensible. Sensible is also free for Zerodha users. So I have logged in Sensible through my Zerodha platform. Zerodha credentials. Okay. Now I'll show you first how you can trade in scalping, but not option buying scalping, because as I always tell, scalping is a bit risky. So you can still do scalping where through option selling, and let me go to that one first. So Finnifty. Now we know option selling needs a lot of margin money. So if I want to sell, let us see Finnifty now in 20,542. So say 20,500. This is the spot, let us assume. So if I want to sell this call option, for example, just for example, if I want to sell the call option, I need a margin of 1 lakh. Okay. This account I'm not using for trading, so it doesn't have any margin as such. I don't use Zerodha for trading. So you need a margin of 1 lakh to sell. Now we can decrease this margin by buying OTM call option. You see, if I go to OTM, that means out of the money call option. Normally it works with 1 or 2 rupees as the hedging. So this is taken as a hedging by the broker, and it reduces the margin. So this is considered as a hedging. If I buy the OTM, so let me buy this one just to have a better hedge. We can buy 2 rupees hedge. See, the fund now required is, before it was without this 1.04 lakh. With the hedge, it's now only 41,000. So what I was telling is, in the beginning of the day, uh, you can buy the hedges. That is all, both OTM, put, call, and put option. Then you can do scalping through selling the option. Why I am insisting on selling the option? Because you will have some margin, I mean, you will have some safety in terms of capital protection. Okay. Now, for example, this is all in the money option, right? The what I'm selling almost at the money. So 103 rupees. So that's why your maximum profit is. Now this maximum loss, we will all these are for intraday purpose, okay, not for positional. So maximum loss we can always uh, control through stop loss. Now, for example, uh, if I sell these 103 rupees options, and this is at the money almost, because the spot is at 20,542 and I am selling 550. So if it goes above these, the the probability of profit is less. This is POP's probability of profit. So what I will do to have a better probability of profit, I'll not sell this one. What I will do, I'll go a bit up and I will sell something which has lesser probability, that because we are already at the, we will be on the expiry date on Tuesday. So normally Finnifty move in expiries in the upper, it's bottom side, it can move anywhere, but in the upper side doesn't move much. Okay, I'm assuming. And also don't take these trades at 9:15, 9:30 like that. Take this trade at 11 o'clock. Okay. Why I'm telling that you don't have much time left. So even if there is a vigorous up move, normally I haven't seen vigorous up moves after 11 or 12 in Fin Nifty. Okay. And these green and red bars you are seeing are the position rate of option writers. So rate is put, call option interest or call option writers, and these are put option writers. So obviously we see we have a big call option writing as 21,030. So if you go to this one, you will have good proper probability of profit. But it 21,030 means nothing is left in the premium, because it's only 5 rupees you will have. So 2 rupees you are already paying for the premium for the hedge. So if you sell for 5 rupees, you will end up with 3 rupees only. So it's not a very good trade in terms of risk is to reward. And though I don't think Finnifty can move 400 points on this day. So at 11:30, okay, for example, at 11:30, you choose 100 point away call option. So for example, we are at 540. This is just for example, I'm telling you, imagine at 11 30 on the expiry date, you are trading and you are taking this position. So if Nifty is still at 20,542. So maybe you will get something around 40, something around 60 rupees maybe, because that time already some decay has happened in the options. So for example, I sell this one, which is a 60 rupees price. This is all from my exam experiences I'm telling. Normally, I see this type of option prices are left after you at 11:30. Okay, now I am selling this, for example, at 24 rupees one. So what I will get, maximum profit is 880 rupees. Okay, the funds rate is 32,000. So if I multiply, you can, this is the way you can do with sensible. So if I multiply with 10 lots, so you need at least 4 lakhs rupees. So fund need is 3.22 lakhs. There sometimes a bit more of my fund is required because of some calculations. So better to have, if you want to take this trade, you need 4 lakhs. You will make 8,800 rupees, which is not very high compared to 4 lakhs. But see, the percentage return is around 2.8%. So what my intention of making this video is for beginners who doesn't have trade much. Is a safe way. Though you can make some money. 2% is not bad in a day. If you make 10 trades like this in a month, you will get 20% return on the uh, capital. Okay. Now again, as I said, I know these are easy trades for experienced people, but can be difficult trades for beginners because I'm selling call option, assuming market will not work. Similarly, you have to bid catch on the put side and sometimes sell put. I cannot describe each and everything currently in this video, in one video, but my intention was just to make a video for beginners. And I'm feeling whatever the market structure is showing at the moment for the second, for these structure is showing. See, here is a very good resistance or some seller is there in 20,600 level for here. This is the consolidation range on the big fall day, after which market broke down and market is not being able to push above this. So this will be the this is my thinking for Tuesday. If market opens gap up from here and say it goes here, see there's a big green candle. After that market fell down, so these green candles bottom is another good level where there is a resistance, because this is a swing. So if market gap up opens and touches here, so around 11 we will see what is the here. I don't think market is going to go up and recover all the losses on Tuesday. There is no such fundamental hint as of now, except for ICICI Bank's result, which might take Bank Nifty a bit higher. But still, there is weakness. If not weakness, there is not. If you see the open interest, there is not much put writing here, okay, and not much call writing. So market is probably going to be flat till this means we I am expecting a sideways market on Finnifty on this Tuesday. Okay, so assuming this, if you sell the 25 rupees call option, whatever is available at that moment with the price of 25, I am for this video, I have taken this one, but this 20,800 may be lower priced on this one. So find a 25 rupees call option at on this day and you place a stop loss. After you take the trade, you place a stop loss of 30 rupees. Okay, that is the only trust. So what will happen? Either you will make this money 2.8% or you will lose. You have placed a stop loss of plus 30 rupees, so you will lose 30 rupees. That's around uh, say 25 you're taking and 30 you're losing, so around 3% you will lose from your base capital. Okay, now again, as I said, if you want to lower the losses, either you can, means whatever capital you're using, if it is 10% of your total capital, you have say you have 30 lakhs capital and using this, then you will not lose much. But if you have only 5 lakhs capital as your base, then take only 5. At least you will get some money even after paying the brokerage and charges. In option selling, the charges are less because the tax is less as per as option compared to option buying. Okay, so you can make say with 2 lakhs you can still make some money. I know this is not looking attractive if you consider a fund of 2 lakhs, but this is a safe trade. And You can trade these slowly. Within 2 3 months you will develop an understanding how to use this. Okay, similarly you can go for put option also. If you want to check for put option, I will delete all these. Now for put option, if you are convinced that the downside will not break, because as I'm telling, it is a sideways market. So for put option, you can buy first. Okay, let me show the actual. Say this one, this 20,400. For put, always buy a bit out of the money, because markets are weak and anytime big red candles can come. So I am very apprehensive of selling a put option at this point. So if I sell, this is the margin required, 1 lakh, and if I buy a hedge, it comes to 37,000. Okay, I think it's clear. Selling requires 1 lakh. If I buy the OTM 1.55 rupees, this is the last traded price of the put. If I buy the hedge, it comes to fund requirement of 40,000. So for example, still you can make 3.8%, and market has to go, is still like, there is a way we can see in the, it is showing Monday to 46 p.m. We can change the date to Tuesday 4 p.m. That is, expiry has happened already. Okay, so you can sit with the put option till 0.7% of break even. After that you will make loss. So you can put a stop loss. If 0.7% means 20,400, that is around 542 to 400, 150 points fall. 150 point fall in Finnifty normally translates to 75 rupees increase in the money put. So if I put a 30 40 rupees stop loss also, then also I have good chance of making money, because there is very rare chance this put might go from 36 to 70 rupees, because this is already out of the money. Okay, but again, as I said, gamma can be anything. If you know what is gamma, gamma is the means the viciousness if there is momentum against you. So the put will increase like anything. Okay, especially puts, they are always jumping up in case of a gamma is there, gamma move is there. Okay, so what I was telling is so still you can make, like, if you have 5 lakhs, you can use like 4 lakhs, you can still make 30,000, 13,800. So this is a way I normally try to trade if I am not being able to monitor my trades. So what the first thing to do, come in the market and you buy the hedges first. Means you buy both, selling is afterwards. We will wait, but at 9:15 or when the market opens at 9:20, what you do, you buy the hedges first. Buy some 1.55 rupees or 2 rupees or 1.550, whatever, put option, and the similar priced call option. For example, if I want to buy the 2 rupees is better, we'll get a better reduction in the margin requirement. So buy these two. Okay, keep it, sit till 11:30. Then at 11:30 you can you can sell the call option, as I said you. Now again, there is another way to you, if you know what is a straddle or a strangle. I go for strangle, for beginners is better. You can sell the 24 rupees call option, whatever is price is 24 at 11 o'clock, and another 24 rupees, nearby 24 rupees put option. So now what we have made is a strangle with 52,000 fund required. If it was not there, then this strangle would have asked for a margin of 1.3 lakhs. So with this one, I have made a strangle. Now, these are beautiful ways to trade, actually keeping your cool, keeping your psychology intact, not much fear, nothing. Okay. See, you have covered a range of point almost 1% here, minus and 1% plus here. If market stays within these at from 11 o'clock on this Tuesday, you will make some money. That is 1782. It is 3.3% of the total capital you are using. Again, as I said, this might not look very attractive, but this is a good way to trade and consistently make money. And when you will keep on trading and slowly when you see the patterns, you can make your own a bit aggressive options, like you can come closer to and get a better premium. But this way, at least you will not blow up your account soon. Okay, you it's better way. So if you have around 6 lakhs, you can still make 17,820 with this triangle. This is what this triangle looks. So as I said, if you see these 3 days, all it's almost like after opening, though the it is showing 0.5%, but at 9:15 after opening, market has stayed in a range. Even at 9:15 after opening, market has stayed in a range like 517 and it is close to 429. So within 100 points range. So what I am doing here, where how much range I am keeping here? It's 305 to 845. So you have from 540 to 305, 1% is around 200 points. And I have seen here that it's around 100. So the probability of profit is quite high here. Okay. And don't make the triangle before 10:30 at least. Okay? Because there is, if you see normally when the market moves, there is a volatility and then a sideways thing happen. Okay. These will test you. Obviously, this will test. Maybe this will take your stop loss in the this one, this side. The in this case, maybe it will hit your stop loss in the put side. So always trade with a stop loss, because even if you hit a stop loss of 25 rupees here, you still have a call which is 23 rupees. So at the end of the day, will not get much money. Maybe it will be a bit loss, but a very small loss compared to the capital. Again, as I said, even whatever you do, there are days which will be red unless you slowly trade. And yes, every day also possible to get green, especially in option selling, but then it will be very safe. Maybe you will sell 10 rupees premium options at around 3 p.m. That also I have done. And normally 3 p.m. the whatever 10 rupees options are there, they go to zero. Okay, this is another way. But just to keep, because all of us we try to get some early trades, so there is a tendency. So you can sit with this trade. If you want, you can break any one side. If you feel like it's getting heavy on the sell side, maybe the sellers are active, then you can simply close these one with 10 rupees as loss. Still you have 10 rupees left here, and you can roll down the colors. But these are only for advanced people who have some idea. Otherwise, you can just simply stay with this trade and see the movements. As I said, you will not lose more than these if you place stop loss of the same price whatever you have paid. I mean, if you have paid for 24 rupees, you add another 25 rupees, make a stop loss of 25 rupees. So here you can see, even if the stop loss hits, that time maybe 10 rupees you will get from, means the price will be 10 rupees if the movement is down, for example. Sorry, not down. If it is down, the P will increase, so it will be 50 rupees. So here in the call center, you will still get 10 rupees. You can close the trade and you can open another triangle. That is also another way. So these are different ideas. Okay. Thank you for watching. I'll come back with more videos in future. Hope this will help you.